Happy Monday, cats. This is Rich with Buy Home Loans. The big news this last week is interest rates. That's right, interest rates. Well, okay, interest rates driven by oil prices. So the big news is really oil prices. Oil prices have been up because of the action in the Middle East, specifically the war with Iran and the liberation of the Persian people. Iran has threatened to shut down the Strait of Hormuz, and they've been attacking ships. So many tankers are not going in and out of the Gulf. That's about 20% of the world's oil supply. The other thing is that Japan has basically said, hey, we're not going to export. China has been cut off at the knees because we're getting most of their oil from Iran and Venezuela. This is a big, big issue. Also, natural gas is becoming an issue as well. But what's happened is, as oil prices have gone up, they're seeing that inflation will be going up in the future because of increased raw material prices and increased shipping costs. That is bad news for people who are hoping for future Fed rate cuts. According to the Freddie Mac interest rate survey, the average conventional interest rate that people are paying right now was 6.11 for the last week, rather than 6%. It went up 0.11%. But a good friend of mine pointed out, and I verified, it's only about $31 on a $400,000 mortgage. So for 31 bucks a month, or a couple of trips to Starbucks, are you going to give up your dream home? Are you going to wait till rates drop down and have more competition? You can buy now, and then as rates fall, you have the opportunity to refinance later. Let's talk about some other economic news. We've already talked about oil prices. Oil prices capped out over 124 a barrel. They were dropped to as low as 74 a barrel. Currently on Friday, this is Friday when I'm taping, they're right in that $94 range. And we see that there's going to be some relief, especially as we see tankers and other freighters start getting escorted through the Strait of Hormuz, and the Iranian military's capabilities get further degraded. Let's talk about what's going on in real estate. In Houston, over the last week, we saw listings were up 6% year over year. Pending listings were down about 8%, and listings about 13% more went off market than the year prior. Closings were slightly down. We're only talking about 60 closings, though. And here's the part that I love. We can tell we're getting into the spring showing season because showings were up about 7.6%. Overall in Houston, we're still seeing the market is very healthy. February year over year, the average listing price went up 2%. We're still seeing a decent amount of activity, and appropriately priced homes are moving off the market. You see some people who are cheering, hey, it's a buyer's market because we're seeing days on market is lasting a lot longer. That's mostly for properties that are not appropriately priced. You got people saying, hey, it's a seller's market because the appropriately priced properties are flying off the market. So it's important for you to do your research. There's not huge major bargains out there because the properties that are selling are the ones that are priced properly. In February 25, we had about 200 more sales than we did last year. Total dollar volume slightly down. Active listings are up. Single family home sales slightly down. But what I'm seeing, the median sales price is down, but the average sale price is up 2%. So we're still showing that we're in a pretty healthy space. The reason the median sales price is down where the average sales price is up is more of the lower cost homes are selling than the higher cost. That's bringing the median down. Other things to take a look at. We had some jobs reports, the JOLTS report. We saw some people coming off of the labor rolls. First, the unemployment. There was 1,000 less initial jobless claims, and a few thousand people came off of the long-term jobless rolls. Why are we seeing these jobless claims and people dropping off the jobless rolls? We're having less jobless claims because more people realize they can't survive on the unemployment. So they're going to the gig economy. They're starting their own consulting gigs. They're dropping off of the long-term, the jobless, because once again, they're getting frustrated at the low amount of unemployment. They're starting their own gigs. Some people are getting jobs. One other thing that we're seeing too, however, is people who have been unemployed for 6 months or more, they're no longer getting unemployment. They've just dropped off those rolls. Overall, the economy is still fairly healthy. We do see some potential for inflation coming up, and the interest rate markets are already pricing that in, but the impact hasn't been huge. If we take a look year over year, the cost to buy a home is still significantly less than it was last year due to two major things. One, if it's your primary residence, the increase in the homestead exemption, and two, interest rates are still way down from where they were last year. So if you've got any questions about anything, please reach out, give me a call. One other thing, on March 26th at 7 p.m., I'm hosting a webinar for people who are self-employed and for realtors that is going to show different ways that you can qualify for a mortgage. It's important you see these things before you see your CPA. This way you don't have to pay more taxes and sacrifice your tax deductions if you don't want to pay the government more. So register, 7 p.m. March 26th is the date. Go to savewithrich.com. This is Rich. Have a great time. See ya.